You came to us looking for a deep dive into a major financial event, specifically tailored for investors trying to make sense of it all.
That's right.
Today, we are cutting through the noise and extracting the essential knowledge nuggets from your sources, covering the market reaction to the IPO of Circle Internet Group.
Exactly. We've gone through the market reports, company profiles, even the background on the tech itself.
And our mission.
Our mission is to give you the critical takeaways, based purely on the facts presented in these sources, really focusing on what matters most if you're an investor looking at this event.
Right. So let's set the scene first. Who exactly is Circle and what's their main game?
Okay, so Circle is a financial technology company, a fintech, founded way back in 2013. They're best known as the issuer of USD coin or a USDC.
USDC. And the sources paint that as a pretty major player in the stablecoin world, right? Number 2, I think.
Yeah, number 2 spot. Market cap hit $60.1 billion. That was as of March and June 2025, according to the source data. And their IPO, which people have been waiting for, was set for the NYSE, ticker CRCL, scheduled for Thursday, June 5th, 2025.
So this wasn't sudden.
No, the announcement was May 27th, but interestingly, the deal actually got upsized just a few days later, June 2nd.
Upsized. So bigger than planned.
Yeah, which kind of signaled some early momentum. They were targeting a fully diluted valuation of up to $7.2 billion by then.
A major stablecoin player going public. That feels significant. Let's just quickly break down the core business for investors who might be newer to this space. What is USDC and how does Circle make money?
Sure. So USDC at its core is a stablecoin. The sources explain it as, a digital currency designed to hold stable value. It's pegged 1-to-1 to the US dollar.
Okay, stable value. And the point?
Well, its main purpose is basically to bridge traditional finance and the blockchain world. You get the efficiency of digital currency, faster, cheaper, borderless transactions, but without the wild price swings you see with, say, Bitcoin.
Got it. Stable value, bridging two worlds. And the revenue. How does Circle actually generate income from this?
Primarily, it's through what they call reserve income. So they hold assets backing every USDC out there, mostly U.S. treasuries.
Right, the reserves.
Exactly. And they earn interest on those holdings. The sources actually highlighted this as a big growth area. Reserve income jumped 55.1% in the first quarter of 2025.
55% growth in reserve income. That's a key number from the sources. And it's built on a pretty big network. The sources mention something like 600 million users.
Yeah, over 600 million users accessing USDC through different partners and about 4.9 million wallets holding it directly.
Wow.
And those partnerships are, well, absolutely crucial. The sources specifically named big players like Coinbase, BlackRock, Goldman Sachs.
The usual suspects.
Right. They integrate USDC into different services, which really drives that adoption.
Okay, stepping back from the fundamentals then. Let's pivot to the IPO itself. The sources really zeroed in on the market reaction leading up to June 5th. What about investor demand? What did they say?
Yeah, this is where the IPO story, based on the sources, gets really compelling. The demand was just described as exceptional. Reportedly, the IPO ended up being 25 times oversubscribed.
Wait, 25 times?
25 times.
Mm-hmm.
For the 24 million Class A shares they were offering publicly, that's just an extraordinary level of interest.
That kind of demand is, wow, it's striking. Did the sources highlight any specific big names showing interest?
They did. Kathy Wood's ARK Investment Management, they publicly stated they intended to buy up to $150 million worth.
ARK.
And maybe even more significantly, BlackRock. Remember, they already manage a big fund holding assets backing USDC reserves.
Right, that connection.
Well, BlackRock planned to pick up about 10% of the offered shares. That's around 2.4 million shares. The sources really emphasize that existing relationship adding weight to their involvement.
Okay, so overwhelming demand, major players like ARK and BlackRock lining up. Where did the IPO price actually land?
Well, with that kind of demand, the sources indicated that the pricing was pushed above the initial marketed range. That range was $24 to $28 per share.
So higher than $28.
That was the expectation the night before listing, June 4th, yeah. At the top end of that original range, $28, they were looking to raise up to $880 million. The final fully diluted valuation settled higher too, at $7.2 billion. That was up from an earlier $6.7 billion target mentioned.
Pricing above the range, 25x oversubscribed. That screams bullish immediate reaction. What did the sources say this implied?
It strongly suggested investor optimism, yeah. The sources linked it to expectations around USDC's continued growth, but also maybe some favorable factors like the reported pro-crypto policy stance of the administration at that time.
Okay, so moving right up to the listing day, June 5th. The sources covered that period around the open. What were the expectations for CRCL's performance, like right out of the gate? Did they have the opening price?
So the sources we had up to their timestamp early on June 5th didn't give us like the exact minute-by-minute opening price or the first hour's trading action. But based purely on that context, the 25x oversubscription, pricing confirmed above $28. The clear expectation presented was that CRCL was very likely going to open at a significant premium to its IPO price.
Were there any comparisons made, like other IPOs mentioned, that might hint at how CRCL could trade?
Yeah, a couple were brought up. They mentioned eToro, that online trading platform IPO'd earlier in 2025. It also priced above its range and apparently jumped quite a bit on day one. So that suggested a possible path for CRCL.
A positive comp.
Right. But they also noted CoreWeave, the AI cloud company. Its stock apparently saw a lot of volatility after its IPO, even though it priced differently. So kind of a reminder that big swings are always possible. And that leads right into another key point the sources highlighted: the expectation of volatility, specifically for CRCL on listing day.
Ah, okay. And why was that expected? What reasons did the sources give?
Two main things. First, a relatively thin float. That just means a pretty limited number of shares were actually available for public trading right away. Estimated maybe only 5% if you don't count insider shares yet to be sold.
And a thin float means?
It can magnify price moves, right? Less supply to meet potentially high demand. Second reason was high implied volatility, or IV.
Okay, 5E. Market's expectation of future price swings.
Exactly. And CRCL's high IV was linked to just the general dynamics and, well, the known volatility of the broader crypto market where USDC operates.
So super bullish demand and pricing, but also these technical factors pointing towards potential big price swings right away. Let's broaden out. What was the general sentiment around this listing, according to the sources, beyond just the mechanics?
Generally, the feeling captured was pretty bullish, celebratory even. The IPO was seen as a real milestone, not just for Circle, but kind of for the whole crypto and fintech space.
Like validation.
Sort of, yeah. Some sources suggested it might act as a positive signal, maybe paving the way for other big crypto names like Kraken or Gemini to try and list later in 2025.
But you mentioned volatility. The sources weren't all hype, were they? What were some of the cautionary notes, the skeptical points?
No, definitely not all hype. This is where the picture gets, more nuanced based on the sources. Several things were flagged as concerns for investors to watch.
Okay, like what?
First, the amount of insider selling. This is a big one. The sources noted that out of those 24 million shares offered, a really substantial chunk, 60%, which is 14.4 million shares, were actually being sold by existing shareholders.
Not Circle itself.
Right. Only 9.6 million shares were new stock from Circle raising capital. The sellers included firms like Accel and General Catalyst.
60% from insiders.
Yeah, and the sources suggested that such a high proportion of early investors cashing out during the IPO, especially after a slow period for tech listings, can sometimes raise questions, about their confidence or maybe just their own liquidity needs.
Definitely something the sources felt investors should scrutinize. Okay, what else tempered the excitement?
There was a noticeable debate presented around Circle's profitability and that $7.2 billion valuation. Some analysts and even comments seen on places like X were questioning it.
Why?
They pointed to Circle's recent financials, specifically declining net income. It was $155.67 million in 2024, which was down quite a bit, 41.82% from 2023.
A drop in net income despite revenue growth from reserves.
Exactly. And high distribution costs were really called out as hitting margins hard. The sources cited over $900 million paid just to Coinbase in 2024.
$900 million to Coinbase.
Wow.
Wow.
Yeah. So those X posts highlighted skepticism about the core business profitability, sometimes comparing Circle unfavorably to Tether's reported numbers.
So questions about the underlying business costs and bottom line, even with the reserve income booming. Any final cautions?
Just the macroeconomic risks. The sources mentioned broader economic uncertainty, citing things like tariff announcements back on April 2nd, 2025, could potentially put a lid on CRCL's upside or just add to volatility after the IPO.
Right, the bigger picture.
They even drew a parallel, noting how that kind of uncertainty had reportedly caused other companies, like Klarna, to pause their IPO plans entirely.
Okay, so it's a fascinating mix presented in the sources. You've got this huge demand, sector excitement, premium pricing. but bumping up against these real questions about the financials, who's selling shares, and the wider economy, even playing out on social media like X.
That collision was really a key theme, yeah. The sort of bullish IPO narrative meeting that more fundamental financial scrutiny.
So, based on all that, for an investor looking at CRCL, what did the sources identify as the main opportunities and risks?
Well, opportunities highlighted included potentially short-term trading momentum, playing that expected premium opening and the general crypto buzz. For longer-term investors, the opportunity was framed more around Circle's position with USDC, its market cap, user base, those key partnerships as drivers for future growth.
Makes sense. And the risks?
Also clearly laid out. One was the potential for an IV crush after the IPO. That's when implied volatility drops sharply, which can hurt certain option strategies.
Right. If you brought calls expecting volatility to stay high.
Exactly. The high insider selling percentage and that pressure on margins from costs, like the big Coinbase payments, were flagged as potential triggers for a price correction if the initial excitement didn't hold. And of course, those broader macro risks, market swings, economic slowdowns, were cited as possible headwinds too.
Did the sources offer any, concrete action steps for investors based on this situation?
They did suggest a few things. First, obviously, monitor CRCL's trading closely on day 1, June 5th. Watch the opening price, watch the volume. Platforms like NYSE or Yahoo Finance were mentioned.
Standard procedure.
Right. For anyone thinking about options in that high IV environment, they mentioned looking at defined risk strategies. Things like bull call spreads, maybe, instead of just buying calls outright, to limit potential downside if volatility collapses.
Okay, managing risk.
Also reviewing the post-IPO filings once available. Looking for details on lockup periods for insiders, future sale plans, that sort of thing.
Good point.
And finally, the standard but important advice. Talk to your financial advisor. Make sure any decision about CRCL fits your specific goals and risk tolerance.
Okay, let's do a quick recap then. Sum up the market reaction to Circle's IPO based purely on what the sources told us.
Yeah, the big picture was overwhelmingly strong demand before listing. That 25x oversubscription, pricing above the range, big names like ARK and BlackRock showing interest. It all pointed to expectations of CRCL opening at a significant premium, fueled by optimism about USDC and the crypto sector generally. But that enthusiasm was definitely tempered by some notable concerns highlighted in the sources. The big one being that 60% of shares came from insider selling. Then, serious questions about profitability, linked to falling net income and those really high distribution costs like the $900 lever plus to Coinbase. And throw in potential macro risks like tariffs creating uncertainty.
And volatility was expected.
Absolutely. High implied volatility plus a thin initial float meant significant price swings post-IPO were seen as a key factor to watch very closely.
Okay, so you've got the key facts from the sources on Circle's IPO debut. It's a story of really strong investor appetite, big names involved, premium pricing achieved, but layered with significant questions raised about the financials, insider moves, and broader market risks.
What's really fascinating here looking at the sources is how that clear excitement and bullishness for a major crypto fintech listing seemed to clash directly with more fundamental investment scrutiny. Questions about costs, about who's selling, about the wider economy.
Right.
It really highlights that even with a super hyped IPO, the devil, as they say, is often in the details found in those filings and analyses.
So what's the bottom line here? It means for you, the investor, understanding that headline excitement is just step one. You need to dig into why the sources flagged that 60% insider selling number, or how a $900 million cost hits the bottom line, even if revenue is growing, or what those macro risks could really mean. Those details are just as vital as the demand figures.
And this brings up, I think, an important question for you to consider as you process all this information, looking further out.
Okay.
Well, the sources mentioned potential future competition.
Right.
Banks getting more into digital currencies, maybe post-deregulation. Plus, you've got Tether's huge dominance in the stablecoin market already.
The competitive landscape.
Exactly.
Yeah.
So how might that long-term stablecoin landscape actually evolve?
Yeah.
And maybe more importantly, how could those potential shifts impact Circle's core business model and its profitability down the road? Well beyond the immediate IPO reaction.
Yeah.
It's a fundamental question worth mulling over.
Absolutely. Keep digging, keep asking those critical questions. That's how you stay sharp and informed in this market. Thanks for diving deep with us today.